Welcome back. Let's get technical now. Thomas Nagel joins us now from equinet, and we're talking all things cars this afternoon. Thomas, let's kick off with the sector.
Yeah, hi Guy. Let's start with the sector, of course. You know, telecoms and so on were the outperformer in the last days, but there was one sector that was an underperformer, still an underperformer, and that's the car sector, the European car sector. And let's start with this index here itself. You see we have an uptrend within the last years, and you see that within the last year, that means 2007, this index moved sideways around of the level of 344. But with the break of these important level, the index make a collapse, and we saw a strong selling pressure in this index, and so this index was down and today, and now we are at the level of 282.50, and that is a really important retracement level. Same time, it's the lower line of the uptrend channel, and I think it's a really good level to buy something like this index or some members of the stocks. Most important, I think, is the relative performance. It's the lower part of this graph you see. Here you see the relative performance against the S&P 500, and I think this index is still in bull mode. That means we have a really good chance for a bottom here. Let's go to the first, in my opinion, most important member of this index. It's Daimler. Daimler, I think it's a long-term buy here. Why I mean so? You see the lower part of this graph, you see these reversed shoulder-head-shoulder formation. We broke the neckline some weeks, some months ago, but now within the last days and weeks we saw something like a back test to test if this shoulder-head-shoulder is real alive or not. That means in the same time the price was down, of course, in this uptrend channel, but here we are on the same really important and interesting level. That means at the level of 51.25, and if we can form something like a reversal at this level, I think this stock will be a further outperformer, and I think Daimler at this position, in my opinion, is a buy.
Let's talk about some of the other OEMs. Renault?
Yeah, I have two of one, that's Renault and that's Continental. I think the short-term picture looks nice, but the long-term not really good. Let's start with Renault here. You see this uptrend. The stock rose along of the upper line of this uptrend channel within the last 3 years, but we saw something like topping formations within October of last year, and after the break of a really important level, we saw a strong acceleration in Renault. And now we are back at the level of 66.25. I think that's a level for a reversal, but nothing more when a recovery here up to 78.20, nothing more so far because of the lower graph. That's the relative performance of the stock, and this is a sell signal for the long term, in my opinion. Let's change to the last one, that's Continental. It's the same picture like Renault, I think. The relative performance chart formed shoulder-head-shoulder here. That was a strong sell signal in last October. That was the reason for the strong acceleration on the downside. But now we have reached the next historical retracement at 63.80, and I think that's the same like Renault. We have a base for a recovery, nothing more so far. Best case, we will see 76.80, nothing more. Sorry for that.
Yeah, looks like some pretty displeasing reading. Thomas, thank you very much. Thomas Nagel joining us from equinet. Right, 48 minutes.